Hi there. I'm Sunny Widerman from Personal Tax Advisors, and today we're here with a tax Q&A where we take your questions about the Canadian tax system and do our best to shed a little light. Today's question comes to us from Eduardo. Eduardo says, I used to be a salaried employee in IT. Recently, I shifted to consulting and incorporated my business earlier this year. What do I need to know about my tax filing? Well, Eduardo, now that you're incorporated, you'll need to file an extra tax return each year. That's one thing. In addition to your personal income tax return, you need to file a separate corporate tax return for your new corporation. Now, this is all pretty standard stuff, but I do have to give you a warning for your particular case. Based on what you've told me, it seems likely that your corporation would be considered by the Canada Revenue Agency to be a personal services business, or PSB. PSBs have special rules, all centered on one main concept. The revenue a PSB receives must simply flow directly to the owner or worker as a salary. No other tax deductions can be taken, no way to pay less than taking it all as salary. So there's no way to optimize the salary versus dividends. Now, why is this? It's because Canada Revenue Agency does not want someone who is essentially working much like an employee to be able to get tax breaks that employees can't get simply because he or she has imposed a corporation between themselves and their would-be employer. To that end, CRA has figuratively sealed off the exits so that a PSB cannot really take any tax strategies. They're just not available to you. So why do I think that you would be considered a PSB? Well, CRA is looking for certain identifying factors that make a corporation more like a PSB than a different kind of corporation. Those factors in your case would be because you are your corporation's only employee, because you only have one payer, which makes them more like an employer than a client, because you're essentially renting out your own skills, but mostly because if you didn't have a corporation, you'd probably be considered an employee. I like to refer to PSBs as the worst of all possible worlds because you're not an employee, you don't get any of the legally mandated employee protections. For example, protection from wrongful dismissal. When you are a corporation working for an entity, they can dismiss you at any time for no particular reason and you really don't have any recourse. But because you're a PSB and not a full corporation and you can't deduct business expenses, you don't get any of the tax advantages that are usually afforded to unincorporated self-employed people, otherwise known as sole proprietors, or to regular corporations. So you get none of the advantages of being an employee and none of the advantages of being a corporation. Now, I will put a link in the description to what CRA has to say about PSBs and what makes a business into one. If you want to stop being considered a PSB, look at their list of factors and try to set yourself apart from them by setting up your working life to contradict those factors. For example, if having only one payer is one of the factors, get a second client, and so on. I hope that helps. Now, if you have a question about Canadian taxes, get in touch through our contact form. The link is in the description, and I will do my best to respond. And who knows? Maybe your question will be the one I answer in the next tax Q&A.